Welcome to Lesson 1 of the Basic Bookkeeping Level 2 course. This course assumes that you have a working knowledge of the Basic Bookkeeping Level 1 course, or have taken other courses and understand clearly how a complete set of books is kept, and how trial balances of the general ledger are balanced. In the Basic Bookkeeping Level 1 course, you were introduced to the invoices companies receive when they purchase goods and services, and invoices they issue to customers when they sell goods and services. You completed journals and ledgers and learned how to balance the general ledger. As you proceed through this course, first you will learn how the ledgers you created for accounts payable and accounts receivable are balanced to the general ledger. Next, you will learn about some of the unique changes in a bookkeeping system of different types of businesses. You will also look in more detail at some of the asset accounts on the balance sheet, namely, the reconciliation of the bank and petty cash accounts, as well as the bookkeeping procedures necessary for capital assets. At that point, you will have enough knowledge to create an income statement, statement of owner's equity, and balance sheet. Finally, you will spend some time discussing how the fundamental bookkeeping procedures you've learned can be easily applied to a computerized bookkeeping system. If you have not already read the preface in your workbook, please pause the media player now and take a moment to do so. As you've learned previously, bookkeeping is the process of entering original data in the form of invoices, adjustments, and information from other documents to create a permanent record of the daily transactions of a business. The records produced are very detailed in nature and form a trail that can be followed to track all the transactions of the business, from the time the invoice enters the bookkeeping process to the production of the financial statements. First, you will review some of the concepts you learned in Basic Bookkeeping Level 1, starting with an invoice and specifically how it's handled in the bookkeeping process. Invoices are documents issued by companies as evidence of the transactions made. There are two common types of invoices: the purchase invoice and the sales invoice. The purchase invoice is a document issued by vendors to you when you purchase goods and services. The invoice contains information on the type of goods and services purchased, the quantities purchased, and the amounts due, including any government taxes. Purchase invoices come in all shapes and sizes, from the very simple ones containing only basic information to the more detailed. Some invoices consist of more than one page, as in the case of a telephone bill, which includes information on long-distance calls, advertising charges, and other charges. If your company purchases goods for resale, you may provide the vendor with an exemption certificate number that would permit that vendor to exempt you from the provincial sales tax. In this case, no sales tax will be charged on the invoice. Invoices on which the goods and services tax is charged are required to have a business number on them. A payment term, such as 2-10 net 30, means that the vendor will allow a discount of 2% on the outstanding balance if the invoice is paid within 10 days of the date of the invoice. Otherwise, the full amount of the invoice must be paid within 30 days, or interest will be charged. Your company issues a sales invoice when goods or services are sold to your customers. The details included on a sales invoice will depend on the type of company issuing the invoice and what information the company wants to record to facilitate the sale and the collection of the money. Some invoices include a reference indicating who will pay the shipping charges. This could just be the term FOB. This term means the shipping costs will be borne by the shipper to the point indicated on the invoice, and means free on board to that point. For example, the term FOB Windsor means that the seller will pay for shipping to Windsor, and the purchaser must pay the shipping from Windsor to the final destination. In the task, you will examine the different types of invoices.